In part 1 of the video, we have learned about impairment loss on trade receivable, which is an expense account in the income statement, as well as allowance for impairment of trade receivables, which is a contra asset account in the balance sheet. We have also learned that the journal entry to record impairment loss is debit impairment loss on trade receivables, credit allowance for impairment of trade receivables. Now we will now illustrate with an example on how to create an allowance for impairment of trade receivables in the first year of business. Let's take a look at example 1. At the end of his first year of operations, which is on 31st December 20x1, Ice Jelly had total receivables of $10,000. After going through the list of trade receivables, Ice Jelly found evidence to conclude that the following two debtors may not be able to pay it up. So there's Tom and Carrie, $100, Desert King, $500. Now the question says that no allowance for impairment was made on 31st December 20x0, which is the previous year. So there was no allowance made. You are asked to prepare the following: the journal entry to record the impairment loss, prepare the allowance for impairment of trade receivables account, the impairment loss on trade receivables account, the income statement and balance sheet extract. So for the journal entry, we will debit impairment loss on trade receivables, and credit allowance for impairment. Of trade receivables. The amount that we debit and credit is the total amount from the two debtors which are unlikely to pay, which is $100 plus $500. So the total is actually $600. So we will write here. The date will be the end of the year, the end of the financial year. Why? Because you only do the estimation only at the end of the year. For the allowance for impairment of trade receivables account, the first thing that you should note is that this is a contra asset account, which means that it is the opposite of an asset account. So debit is actually minus, credit is a plus. Now in the journal entry that we recorded, we credit allowance for impairment of trade receivables by $600. So we write $600 in the credit column, which also shows that we are increasing this account by $600. Now write in the balance of $600 credit in the balance column as well. The account that we debit is impairment loss on trade receivables, so we write it here. Do note that the date is the last day of the accounting period, which is for this company December 31st. So write this date here, December 31st. there will be a balance brought down to the next year. So we will have to write 20x2, leave a line, and 1st of January. And write the balance brought down of $600 credit. Now there should not be anything written in the debit and credit columns when you are recording balance brought down. Now for the impairment loss on trade receivables accounts, take note that this is an expense account. So debit is a plus, credit is minus. In the journal entry that we recorded in part A, we debit this account by $600. So we write 600 in the debit column and write in the balance of 600 debit. The account that we credited in the journal entry is allowance for impairment of trade receivables. So we have to write it here. The date is the end of the accounting period, which for this case is December 31st. At the end of the year, we will need to transfer this amount to profit and loss. As this account has a debit balance of $600, we will have to credit this account by $600. In order to transfer the whole amount to the income statement and reduce the balance to 0. The account that we debit is profit and loss. We write this here. Again, this is to be done at the end of the accounting period, so the date for this example is still December 31st. The impairment loss on trade receivables, which is the expense account, will be listed under expenses in the income statement. So we'll write less expenses and we'll write impairment loss. On trade receivable. $600. Now be careful not to write the allowance for impairment of trade receivables in the income statement, as this is a contra asset and will only appear in the balance sheet. Now to prepare the extract of the balance sheet as at 31st To prepare the extract of the balance sheet as at 31st December 20X1 for ice jelly, we have to be careful of a few points. Number 1. Although the balances owed by Tom and Carrie and Dessert King are unlikely to be collectible, the amounts are still included in the total trade receivables of $10,000. So we have to write $10,000 for the amount of trade receivables and not the net amount. So for your balance sheet, this will appear under your assets and specifically your current assets. So trade receivables will be the total amount of 10,000. Then you less the allowance for impairment of trade receivables. So less 600 for this case, and then you have your net trade receivables of 9400. So the $600 allowance for impairment of trade receivables on the two debtors has to be written here as a deduction from the total trade receivables of $10,000. The net trade receivables of $9,400 represents the estimated amounts that are collectible in the near future. Now in the next part of the video, we will look at how to increase the allowance for impairment of trade receivables at the end of the second year of business.